Welcome to TrafiGuard, Supply Chain Trade Finance made inclusive, where we address a problem that a lot of small companies, especially exporters, have limited access to financing, and if it comes at high costs.
The biggest hurdles in trade finance are insufficient and inefficient credits for the sellers, and on the buyer side, it is the validation risk. And hence, there is a need for programmable trust for reducing buyer and financial risks
and facilitating seller borrowing.
Let's go through an example. Let's say the buyer wants to buy goods from the seller to the right in the amount of $100,000. So first, both have to register with the TrafiGuard smart contract, and the seller, in addition, has to provide his digital identity to increase trustworthiness. Also, to increase its credit score, the seller has the option to provide additional financial information and also a bill of lading prior to departure of the shipment in order to have additional verifications which will be stored on the blockchain or proof of it. This way, from the deposited amount, which will be locked in the smart contract of 100,000 USDC of the buyer, the seller has the opportunity to take out a loan depending on its credit score of 10 to 50%. Once the shipment arrives at its destination, the deposited amount of the buyer will be cleared with the outstanding loan and sent to the seller. Also, the financier will receive a share. Let's take a look at the application.
Financier deposits the funds for purchase in USDC, which is locked as collateral using the compound protocol. They can do so by clicking the purchase button, entering the amount, and locking the collateral. The seller will then need to register with the Bloom decentralized identification app and scan this QR code. Using this information and more from our trade finance oracles, the seller is assessed with a risk score, which in turn will give them increased access to a loan based on the financier's collateral. Our Chainlink oracles use this information to call external APIs and return a risk score collected by our underwriting contract. The risk score is then used to assess how much of a loan the seller may take against the financier's supplied collateral.
The buyers get the security that they need, and the seller gets an option to finance their working capital needs.
And this is the team to make it happen: Shane, Carlos, Sathya, and Alexander. If you're interested, do not hesitate to get in touch with us.